All right. I'm here with Laurits Just, and he is the manager at Flippa for Flippa Invest. How's it going, Laurits?
Very well, Steve. How are you?
I'm doing good. I'm doing good. So before we kind of share the latest and greatest about Flippa Invest for everybody listening that's operating businesses, let's talk about you. Let's talk about your background. What brought you in to become the manager here?
Um, yeah, the journey to managing Flippa Invest. I don't know how far back you want to go. Can we skip childhood and just jump to
Yeah, yeah,
career? Okay.
sure.
Uh, well, I'm from Denmark originally, and hence the I guess more exotic version of Laurits. And I actually I think my journey to Flippa started when I joined a big American asset manager working in finance and more on the fintech side of that actually. I was in London. I had just finished up my studies there, and then came COVID. And to be honest, like when you work for a big corporate, you spend a lot of time when you're not traveling to clients and doing projects. I guess wondering how to kind of leave corporate and do something else, and that was certainly the case for me. And then that led me to, with a friend from college, to quit our jobs. He was working in big tech and co-found a startup called Bits for Digits, which we started in Berlin. So we both moved from Dublin and London to Berlin in Germany because we got a bit of funding there, and that led to the eventual acquisition of Bits for Digits, which was merged into Flippa, and led me to managing Flippa Invest as a separate platform.
Very cool. So let's unpack the Bits for Digits business. It was you and a co-founder. What did, tracking look like? Where was it revenue, user growth? How did you kind of set your KPIs when you were growing it?
Yeah, so let's talk about what Bits for Digits is or was. So I was working in finance and well, at BlackRock specifically, and my co-founder at Google. And so we were both in, like, I was in finance, he was in tech. And so we were brainstorming ideas during COVID, during lockdown, about what kind of white space in fintech to kind of attack. And we were really inspired by a blog post of a guy called David Heinemeier Hansen, or DHH as he's known as on Twitter, who is the founder and CTO of a company called 37 Signals. They're known for Basecamp, among other SaaS businesses. And so in that blog piece, he talks about him and his co-founder Jason about how they sold a piece of Basecamp to Jeff Bezos in a secondary. It was not very common at the time, and we were pretty taken aback by this type of transaction, which you don't really hear about often, but really seems to kind of be a win-win where you onboard a partner and you kind of take some chips off the table, and that type of transaction, there wasn't really a marketplace for that. There wasn't a platform where you could go if you didn't have Jeff Bezos on speed dial. And let's get real. Like, most people don't have Jeff Bezos on speed dial. So if you want to do that type of transaction, where would you go? And we thought, okay, well, let's create a place for that, and we called it bits4digits.com, and it became a partial buyout or a partial acquisition marketplace for the founders who might want to retain some upside and not exit completely, but still like take some chips off the table in either a minority or a majority buyout. So that became the start of it. We actually got to speak to DHH on a call. Like, he took an hour out of his time to kind of talk through the transaction that he did with Jeff, and yeah, that became the beginning of our startup. And we pivoted a bit along the way to also allow full acquisitions, so not just partial. But the kind of key metrics, the main KPIs for our platform was really obviously revenue, being mostly bootstrapped. So we got a bit of grant stipend funding for it. But then revenue was really key. Like, we wanted to bring it to market fairly quickly, which is difficult within the space of fintechs actually. But the other KPI was whenever we would onboard a new client, a new business, would be like number of conversations or number of engagements from buyers with that client. So that became the key metric, is really number of deal rooms, so with that seller.
Yeah. Yeah. Very cool. And I think from as one exited fintech founder to another, I think a lot of people listening don't really comprehend how large finance is in the grand scheme of the world, and how much disruption financial technology has the opportunity to do still. Like, a lot of people think that there's saturation in all these different parts, but it's just so fragmented and old, like the old system, that it's exciting when young founders jump in and say like, hey, this can be done slightly different. And just like a blog post, like you said, could inspire something to completely kind of change part of the space. And fintech is just such a important part of how, the future looks for people. And I like that you guys got to talk to the original author, DHH, of the post too. Like, that kind of goes full circle to get the narrative there. So let's talk about how Flippa approached you. Was it, you were in contact because you were kind of in a similar lane of going full acquisitions after a pivot? How did that start?
Yeah. I mean, we should really get Blake, our CEO, on the call here to talk about that motivation behind it. But as it was relayed to us, my co-founder and I, we were based in Berlin, Germany, right? So kind of the heart of Europe in a certain regard. And Flippa, as an Australian company, is very international. It's worldwide, right? In fact, I think a majority of buyers and sellers are US based at this point. But Europe is kind of one of the fastest growing markets for Flippa. And so they wanted to kind of establish more of a presence and kind of a beachhead somewhere more central. And I think Bits for Digits became that after we, as you put it, like kind of merged more into the same lane with full acquisitions as well as partial acquisitions.
Hmm.
Plus, I know that with the launch, like there was a pilot of Flippa Invest back in 2022. With the success of that, he was eyeing who to kind of bring that to into production, if you will. And that was kind of how I was persuaded into going on board. Flippa was the kind of entrepreneur in residence for Flippa Invest. But the actual business itself, Bits for Digits, was completely like merged and integrated into Flippa. So all the assets on our platform became Flippa assets, and I subsequently joined as well. But I think also Flippa is just becoming of a size where there are many different types of transactions going on the marketplace. And I think Bits for Digits had a lot of bigger assets as well, whereas I think Flippa historically has had more, I guess, units, not whales, on its marketplace. And with the acquisition of Bits for Digits, Flippa is also making a statement that they're going up market, and which they indeed are. I can say that now, being on the other side, I see which deals are on the marketplace, and they are getting bigger and bigger. So the platform is maturing, it's becoming more sophisticated, and I think it's just a natural evolution to kind of expedite some of these initiatives with the acquisition of our startup.
Yeah. Yeah. And an exciting piece with Flippa as well is just the sheer amount of data over the last 15 years. And now, as AI's entered the mix, we all have sort of seen that this walled off data and unique data sets are where the value is accruing, like at a rapid clip. We're seeing all these companies launch AI, including Flippa, and the insights and matching and everything together. So a lot of cool stuff going on behind the scenes. So let's shift gears a little bit and talk about Flippa Invest. I think we were talking briefly before recording what the most impactful way to talk about this is. And for listeners out there that are operating businesses, I think that this is going to be geared towards you specifically, because when we were talking before recording, there's already over 80,000 people on the other side, the investment side, the people that are there ready. So let's start with what it is from a high level,
Hmm.
and then we'll talk about how people listening and operators and founders can really take advantage.
Sure. Um, I think I always like to start with also why. Like for me, why was this interesting to me? And I think
Hmm.
the story that I told you of how we got started, my co-founder and I, with Bits for Digits, is a relatable topic here because we were, when we decided to quit our jobs, well-paid jobs, to kind of go bootstrap a fintech. We were on the like we didn't start out thinking we were going to bootstrap. We were pretty certain that we would have to take VC dollars. Also, it was during a time in 2021 where VC dollars were kind of just plentiful. You could easily raise, and in fact, I think we took almost 100 calls with different VCs. Um, but we we were also a bit naive to think that we could actually get the MVP launched and get a bit of traction before raising. So just rather than raise with just a pitch deck, we would want to have like some kind of product and a bit of proof. And so we actually built everything in no code, launched it, took it live on Product Hunt, and it became apparent to us that actually it was working with what we had, and we didn't need to raise venture capital. And the more we spoke with founders who had raised it, the more the downsides were also becoming more apparent to us. Like if you raise venture dollars, then you are in a bit of a rat race with like growing or dying. It seems it's kind of an all or nothing situation that you've set yourself in, because the investors on your cap table have like these outlier outcomes in mind when they invest in you, and you're kind of promising them a decacorn outcome. And so for us, I guess, we were kind of like, okay, well then we're gonna apply for some grant money from a different route. It's very difficult to attain grant money oftentimes, and you don't really get a lot. We got about 200,000 euros, which was just enough to kind of get us started, but it doesn't really get you far. So like we were kind of like in this, I think where a lot of founders are of like, okay, well, I'm either going to bootstrap this or I'm going to take VC dollars, and a lot of founders don't have a VC case on their hands even. So how do they expedite growth? How do they accelerate traction? On marketing or on staff, like product development, any of these initiatives that will bring about scaling your business. And that was certainly the situation for us. And so Flippa Invest kind of hits home with me because it's creating a kind of alternative path to raising capital. We don't, like you mentioned, we have 80,000 accredited investors on Flippa Invest, ready to, deploy capital in growing businesses. Well, none of them are venture caps. Like they're not VCs. They are high net worth individuals, typically exited founders or current operators, or they're institutional, family offices or private equity firms, and they have a different mindset when they invest. They're not looking for the next Uber or DoorDash. They're looking for more healthy, growing, thriving digital businesses. And that mindset is difficult to find elsewhere outside of Flippa's platform. So Flippa Invest is bringing these investors to an audience that I think is in kind of need of an alternative path to the traditional VC all or nothing or bootstrap to infinity. And so that's really what Flippa Invest is. And founders can take advantage of this by yeah, obviously going to Flippa Invest landing page, website, and just submitting a quick like I think 8-question form, like questionnaire about their business to see if there's a fit to our mandate. So all these 80,000 investors are looking for generally three things, and that is U.S. registered businesses with a digital business model of either software like a SaaS model, or a content business like a media company, or it could be a mobile app on iOS or on Android, or something akin to these businesses. And then thirdly, growing revenues. It's important that for our investors, at least, that businesses are more than a pitch deck. Like I mentioned with bits for digits, we didn't just want to like raise on a pitch deck. We wanted to have a product, we wanted to have customers, we wanted to have a real business. And similarly, the investors that are on Flippa Investor are looking for more proven businesses like that.
Nice, nice. And I think with people listening and how to position themselves, I think that this is a good segue into getting prepared, because I talk a lot about that on the show. A lot of questions come up frequently about how to prepare for what we were talking about briefly, like a full exit. But in this situation, if they were to want to go on to Flippa Invest, find investors to get matched with and raise a round, what are some steps that people could take actively that are things that they can do to get prepared?
Yep, great question. Yeah, certainly this is there's always a bit of education involved in fundraising, as well as like exiting, for those that go to the M&A side of Flippa. But for the invest side of Flippa, if you're looking to raise growth capital as a founder, you would do well in preparing a P&L, so a profit and loss summary of the like as far back as you can take it. If your company is only 6 months old and you only have revenue for 6 months, fine. 6 months P&L statement will do. But if you're multiple year old business, then preparing a P&L summary that kind of shows the traction in dollar terms is great, or in euro or whatever your like primary currency is for your business. Because Flippa Invest, although we only take US registered companies, they can be based in Europe, but they need to have their top co in the United States. So that's an important caveat here. We do have European clients who have done what's in industry speak called a Delaware flip, where they flip their operating or top entity to a US based entity, usually a Delaware C Corp. So we do take international clients, but it's important that they have their kind of parent company in the US. But yeah, preparing a P&L, and having some kind of, it doesn't need to be like a very polished pitch deck, but pitching is important when you're raising capital. Similar to if you're exiting, it's good to have some kind of like investment memorandum, a SIM, usually a confidential investment memorandum. You don't need to have it to exit on Flippa. In fact, usually you work with one of our brokers to prepare that. But having a pitch deck for capital fundraising is good, because you're not raising only on past performance, which is what the P&L shows. It shows the kind of month over month traction in terms of revenue and in terms of profitability, but it'll also show, or it'll not show where, like what kind of opportunity you're chasing. It'll show the increase in growth, but it won't show what is the market size here. So that's really where the storytelling kind of enters the picture, and where future opportunity is a part of the kind of attractiveness of a business, not just past performance, which is what you're exiting on usually. So for fundraising, we try to look at both past performance and future opportunity, and the pitch is a big part of that. So including some kind of market opportunity, or what's the next thing on the roadmap, and how can you cross sell that into your existing customer base, or how is there a new geography that you're going to enter soon, and how can you leverage your playbook from the existing market into expanding into a new category? Like there's all these things that you can highlight and put on a slide deck, really. And those are the two things I would say to founders. Like try to prepare some of that and then reach out. But you can also reach out even without having that, and you can do that after we have an initial call.
Got it. And when it comes to valuation, I think that these are two very different frames. In the M&A side, where everybody that I talk to, it's all based on profit. Everything is all around how much profit is being made and EBITDA and everything. So when it comes to raising money, there's a very different, because you talked very well about roadmap, vision, what's the opportunity. Are people going to need to be profitable when they're coming to the platform? What are you seeing in terms of valuations, and how do people approach that when they're going to raise on Flippa Invest?
Yeah, no, profitability is not a requirement. Only growing revenues is. So yeah, it's not a requirement, although it is favored amongst many investors on Flippa Invest. It is not a hard requirement from our side because it's you know when you raise growth capital, I think the pool, it's hard to find businesses that are looking to bring on outside investors if they're already turning a profit. If they're Because then they can reinvest that profit into growth, and it's more likely that you're going to find. That's my kind of like formidable task, is to really connect with founders who are at the stage where they have revenue, the growing revenues. They're perhaps not profitable yet, but there's a clear path towards it, and they need that, that kind of round to get them there. And that's where Flippa Invest, I think, is really perfectly fit to help that founder to get there, and achieve that goal. And I think a lot of investors are interested, or I know a lot of investors are interested in seeing that. And if we take the case of Jeff Bezos with DHH and Jason for Basecamp, although it's probably a rounding error now. I mean, he every year he collects dividends on Basecamp. Still to this day, he's still on the cap table. And now Basecamp is super profitable. It was also profitable early on, I should say. Like SaaS businesses can often be those exceptions of like businesses that are profitable pretty much from day one if they're bootstrapped. But a lot of businesses aren't, and they get profitable a bit later into the journey, and that's fine. And a lot of investors can benefit from getting exposure to those types of investments, and that's really what Flippa Invest is bringing to the table. But not just dividends and profit sharing, but also liquidity events like exits down the road, either on Flippa or on some other avenue. But yeah, that's kind of what Flippa Invest is I think unique for, is you can see both outcomes here. It's not just an IPO. That's the type of liquidity event you can expect.
Yeah. Yeah. And also all under one roof is really unique. And I like the positioning there where if I am, let's call it 6 months or a year in growing, and I go to Flip Invest, raise call it a small round of a couple hundred K, and then get to the next phase, maybe that is an exit on Flippa. So it's like a
Yeah.
full value chain there for founders. I guess with the process currently, you mentioned before we were recording that there was a few people that have already done this. What can you share about those examples? What types of businesses? What amounts did they get
Yeah.
involved with and raise?
So at the end of 2022, there was I guess you could call it an experiment with trying to see, could Flippa be more than a place to buy and sell businesses, and that was Flippa. That was the early beginnings of Flippa Invest. And during that time, I was not with Flippa. I was doing Bits for Digits, but during that time, a couple of businesses were funded as part of the pilot. One of them is on the website as a referral client. It's called Treasure Hunter,
Mm-hmm.
co-founded and run by Michael Fink. And Michael Fink is well renowned within like bootstrapping businesses, and growing businesses. He's an operator, and with several ventures under his belt. And he raised $250,000 on Flippa Invest. It took him only a couple of weeks to raise that from the investor community. But you don't need to you don't need to be a superstar. Really, I think what's unique about Flippa Invest is, you also pointed out, with Flippa's platform kind of being more and more mature and kind of advanced technologically, is that you can plug in your metrics of your business and showcase, oh, here's my business. It's not just a pitch deck. I also have a pitch deck, but I also have my traffic data here from Google Analytics. I also have my revenue data here from Stripe, my churn rate. I have my accounting software like QuickBooks Online just integrated. You can actually, after signing an NDA, get into my data room and you can see a lot of the sensitive data around my business and decide if you want to invest in this asset as well as me as the operator, right? So there will be founder bios, LinkedIn's, et cetera, to go with the business metrics. But I think that's kind of unique to Flippa Invest is that. So now that we're bringing Flippa Invest to like permanent market launch, it's getting even easier to showcase your traction and for investors to kind of to be able to figure out if you know both the founder and the actual business is of interest to them, and that was harder to do during the pilot. It was not as technologically advanced, and still we managed to fund a couple of businesses, including Michael's.
Yeah. Yeah. And that's a great example too. Michael's with a $250,000 raise. So just before we get to the finale, I want to high level, what is the minimum that people are going to go in and try and raise? And what is the upper bound that you guys are kind of capping the raises at?
Yeah, great question, Steve. So we have set the range from 50,000 US dollars to a million, but it's meant as a range for funding targets. Oftentimes, you'll see a really attractive business raise a funding target of say a million, which they could launch a round on Flippa Invest for a million. But they might see like a bigger demand for participating in that round that they have initially budgeted for, and we can allow for oversubscription. So you can aim to raise a million on Flippa Invest, but wind up raising 2 million or 3 million if there is demand for your round. So it's really up to the founders to figure out, well, do I want to take on initial investors? So even if I'm only aiming to raise 100,000 and there's interest for 300,000 or a million, then you can certainly oversubscribe, and we allow that. So we have two ways of raising capital on Flippa Invest. You either raise with an SPV, which is a fancy abbreviation for a special purpose vehicle, which is simply we set up a separate entity with a partner, sidecar, they're called. We set up a separate entity to pool investors under. Now, I don't want to confuse folks too much here with technical finance jargon, but it just makes it easier as a founder to manage let's say a bigger group of investors. It could be if you're raising capital from more than a handful, then instead of onboarding each investor directly to your cap table with rights and whatever terms comes with that, you can simply pool them in a separate entity called an SPV usually, or a roll-up vehicle, it's also known as. And then have an easier time filing taxes and everything you need to do. And in fact, we can manage all of that for you via our partner Sidecar. And so we call that a group raise, because usually you raise from more than one individual. But if you're raising a smaller round and you can fill it with like one or two people, then a direct raise is probably more for you. Like if there's an investor cutting you a check for 50,000 or 100,000, which is not abnormal at all. Like usually investors cut bigger check sizes on Flippa Invest. Then you can do it a direct raise where you don't need to set up an SPV, and you can do that also on Flippa Invest. So we have both options, and it's important here to note is that it's not crowdfunding. So neither the SPV route or the direct raise is known as crowdfunding. Crowdfunding is when you have investors who are not accredited, who are not high net worth individuals or entities. You can go to a lot of crowdfunding platforms and raise from your customers if you're a consumer brand, or from friends and family. But that's not what Flippa Invest is. We only have accredited investors, also known as smart money investors, and they usually bring not just capital. Usually, they also bring network or expertise that you might be able to leverage by having them invested in your business. So that I think if I could raise money for Bits for Digits, I would certainly, as a fintech founder, go and raise from like smart money investors. Also because they tend to put bigger checks to the round than just like say a typical crowdfunding check of like $50. We kind of start at like 5,000, and you can, for your round on Flippa Invest, you can set a minimum of 10,000 or 25,000, whatever the minimum should be, to attract the right type of investor to your round.
Nice. Very nice. Yeah, I like that you clarified that it's not crowdfunding. There's no interest rates attached to this. This is a whole different type of alternative financing. And I think
Yeah.
that the data sources are also important to mention here, because I've talked to and dozens of women entrepreneurs who went out, tried to raise, couldn't do it. And when you have data sort of wins all arguments. Like there's no real, there's no real back and forth that can take place if your numbers speak for you. And I think that that's something that I wanted to mention on this episode, is that people that have tried to raise in different areas and they maybe felt like they couldn't get it, this would be a great opportunity, because
That's right.
showing the numbers speaks volumes. Like you can take a back seat, just show the data and say, this is the facts here. And I think that that is a superpower that people can really have now with all the tools that are available, especially through something like this. But just in general, plugging your Stripe in, your QuickBooks, just what you've done, like your accomplishments, and just show that. I think that is just, I wanted to mention that for people listening, because
Sure. I usually say data doesn't discriminate, right? Like if the proof is in the pudding, and as an investor, you, especially those on Flippa, and Flippa Invest, they tend to weigh that way higher than like, where you went to school, let's say, or which company you worked at. So I am also a huge proponent of like meritocracy, like whoever does the job best. Well, let's look at the data, and if they're a good operator, they're a good operator, and the business will speak volumes of that.
Yeah, that's good. I'm glad that you're running Flippa Invest. It's good to see somebody that's like-minded like that. And everybody listening, it's very important to know that data, like Laurits said, speaks for you. So execute and then go figure it out. So that takes us to the finale. Knowing what you know now, what would you tell yourself 10 years ago?
Oh, I think, as you probably know, Steve, fintechs are very regulated. It's just a very regulated space to operate in. And I think if I was going to do my first business, I would not pick. I would not pick fintech. We had to deal with a lot of lawyers for bits for digits. Like that was our main expense, and it was also our main time suck. And I think if you want to bring something to market fairly quickly and figure out if there is, traction, then I think fintech is just a very difficult category to do that in. And so it's also a great moat once you do launch. But there's just, if you want to pivot because you're not entirely sure because you're doing something new, then I think it's better to probably start a SaaS business or some kind of app as opposed to. I think AI is really the next frontier here. That it's not super regulated. There's a bit of data regulation, especially here in Europe, but in the US and other parts of the world, still fairly manageable to build an AI company. And we see a few applications already for raising capital on Flippa Invest by AI apps and the like. So that's really encouraging to see.
Nice. Very nice. So
Yeah.
where can people learn more about Flippa Invest, and where can they apply?
Yeah. No, if you go to flippa.com /invest, you'll see that there's a wait list for investors, and there is an application for growth capital. So for the founders, hit apply to raise capital, and for investors, they can sign up to get notified once we launched our first cohort of businesses raising capital. We already have a handful of businesses ready to go live when Flippa Invest launches permanently. But for anyone who's looking, any operator who's looking to raise growth capital for their business, I highly recommend going to flippa.com /invest and applying to raise a round on our platform.
Agreed. Agreed. No downside to going and applying. You guys
Nope.
can go
Doesn't cost anything.
figure out what's going on with this product because I'm a fan. Obviously, I really, based on the conversations I've had on this show for years now, this is a huge need for people to get alternative financing for their business, and it's a massive, massive opportunity for individuals and for Flippa, honestly. So that's it for the show. Thank you all for listening on iTunes or Spotify. The links that Laurits mentioned will be in the show notes. But thanks so much for coming on and sharing your story.
Thank you so much, Steve. It was a real pleasure. Let's do it again sometime.